The US economy is on relatively solid footing heading into 2024 compared to a year ago. Inflation has cooled, labor markets have remained stable, and the Federal Reserve has opened up to the possibility of decreasing interest rates at some point next year. Many economists, including Federal Open Market Committee or FOMC members, anticipate a soft landing for the US economy in 2024 that will include slowing GDP growth without a recession. However, a single misstep in Fed policy could easily slow the economy so much that it contracts into a recession, making the next several months. Economic recessions are no reason for panic and have been a regular occurrence over the past century. However, investors can make the most of a difficult situation by knowing which risk factors to watch and how to position their portfolios if a recession happens in 2024. 2024 Recession Risk Factors. 2024 Recession Risk Factors. Many factors can trigger or contribute to a recession, but there's no question over which two are the biggest risks to economic stability in 2024. Any investor who hasn't been living under a rock for the past year is already aware that the primary economic risk factor heading into 2024 is inflation. After reaching a 40-year high of 9.1% in June 2022, year-over-year consumer price index inflation has fallen to just 3.1% as of November 2023. The second risk factor in 2024 is elevated interest rates. The Federal Reserve has taken an aggressive approach to combating inflation by raising interest rates to 22-year highs, and it has made tremendous progress in getting inflation trending steadily lower toward its long-term goal of 2%. Higher interest rates increase the cost of borrowing money, discouraging companies from taking on debt to invest in expanding their businesses. Higher rates also reduce consumer spending, easing demand pressures that contribute to rising prices. The Federal Reserve has raised interest rates 11 times since March 2022, bringing its Fed funds target rate range up to between 5.25% and 5.5%. The Fed issued its most recent rate hike in July 2023. Given the latest inflation trends, the bond market predicts that the Fed will pivot from rate hikes to rate cuts by March 2024. Potent.